gentlemen, good day and welcome to the Q1 FY2024 earnings conference call of Techno Plasts Ltd, hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Suryavanshi.
Thank you, Michelle. Good afternoon and very warm welcome to everyone. Thank you for being on the call of Techno Plasts Ltd. We are happy to have the management with us here today for question and answer session with the investment community. Management is represented by Mr. Bharat Kumar Vagheria, Managing Director, Mr. Raghupati Tyagarajan, Whole-Time Director, Mr. Sandeep Modi, Senior Vice President, Accounts and Corporate Planning, Mr. Hemant Soni, Vice President, Legal and Corporate Affairs. Before we start with the question and answer session, we'll have opening comments from the management. Now I hand over the call to Mr. Bharat sir for opening comments. Over to you, sir.
Yeah, thank you for the introduction, Vikram, and good afternoon to all of you. We are here essentially to talk about our results for the Q1 FY 2024 and outlook for the rest of the year. We are pleased to begin the year on an encouraging note with a good year-on-year volume growth of 18% and revenue growth of 14%, driven by demand in industrial packaging and the robust growth in CNG composite cylinder business, which is 83%. Profit after tax for Q1 also increased by 26% year-on-year, led by higher utilization of capacities. Demand for Type 4 composite cylinders for CNG gaskets continue to be robust with an order book positions of around rupees 2,025 crores. With strong growth in sales of value-added products, composite cylinder, LPG and CNG, along with the stable core industrial packaging business, we are highly optimistic of a strong performance for the full year. Coming to the financial number, the results are already announced, but I will just walk you through some of the key financial and operational highlights that start during the Q1 FY24. Previous year figure also I will read for comparison on a consolidated basis. Net sales stood at 1,080 crores. I am glad to tell you in the first Q1 of our history of the company, the highest business is 1,080 crores. Then last year it was 945 crores. EBITDA 148 crores is against 124 crores. Profit after tax PAT is 56 crores is against 44 crores. Cash profit 103 crores is against 86 crores. Is compared with the previous corresponding quarter I just in terms of the percentage. Net sales increased by 14%, volume increased by 18%, EBITDA increased by 19%, PAT increased by 26%. India and overseas business is 15%, overseas 13% as far as revenue part is concerned. Volume increase is concerned 19%, and overseas India is 19%, overseas 17%. The EBITDA margin stood at 13.7% as against 13.1%, an improvement of 60 basis points due to higher share of the value-added products and increasing the capacity utilization. Now, share of the business, established product versus value-added product. Value-added product grew by 24% in Q1 FY24 as compared to Q1 FY23, while established products grew by 12%. The share of value-added products has been 24% of total sales in Q1 FY24 is against 22% in Q1 FY23. share of India and overseas revenue share is 63 and 37%. EBITDA margin in India and overseas are at 13.9% and 13.4% respectively. This is the net cash from the operating activity generated in Q1, 74 crores. And I'm glad to inform you that debt is reduced by 32 crores in Q1. The total capex is also within the budget. In the Q1 incurred 43 crores, which includes towards the capacity expansion, reengineering, automation, considering the cost of the labor cost is increasing, and 26 crores for the value-added products, that is IBC and composite products. Furthermore, as informed during last call, company has undertaken phase 2 expansion plan for increasing the manufacturing capacity of the CNG cascade by 600 numbers cascade per annum. Moreover, under the phase 2 expansion, the company can utilize the capacity to manufacture cylinder both CNG and green hydrogen. Now, I know that all my valued participants in this call would like to know about consolidation cum restructuring of the overseas business. I am happy to inform you that discussion with the prospective buyers are at an advanced stage in 2 different geographies. That is, as we know that overseas we have a presence in 10 countries, 2 geographies we are talking, that is in Southeast Asia and the US region. We are confident of bringing a positive closure shortly. The company's strategy of shifting the valuation based on the 2022 calendar year result and splitting the geography to facilitate discussion with the different prospective buyers has worked well. As informed earlier, the profits will be used for the repayment of the debt, capex for the composite cylinder, LPG, CNG and hydrogen, and core businesses in India to meet whose market demand, and will also be used to benefit to the shareholders. Now, I would like to open the floor to answer specific questions, if any. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask questions at this time. The first question is from the line of Ganesh from GK Advisors. Please go ahead.
Sir, can you hear me well?
Yes, Ganesh.
Okay. Sir, just a clarifying question. Last year with capacity of 180 cascades, we made around 150 crores.
Your voice is muffled. May we request you to use your handset, please?
Sure, sir.
Thank you, sir.
Sir, can you hear me well?
Yeah.
Okay. So last year with 180 cascade capacity in CNG, we made around 150 crores. Now we have a capacity around 2.5 times of that. So shouldn't our revenue capability be around 350 crores or something like that?
You have other questions or this is the question?
I have a couple of more questions, sir.
So I tell you, you just give me the questions, so I will answer you all the questions at a time. Number 1, you want to understand from 180 cascade to 480 cascade, and out of 480 cascade, what is the revenue can be generated, right?
Correct, sir.
Right. Number 2, what question other?
Number 2 is, we also have mentioned in the slide deck about the composite cylinder for oxygen and breathing air. Just want to understand what will be the, addressable market size for that in terms of revenue.
No, what is the market size that we get to say? Okay, market size you want to understand, right?
Okay. Just another question, sir. Just the third question. That is all from my side. Third thing is, with the demand in India among the LPG distribution companies also capped, with our
with our order with IOC. Looks like the international demand is also capped because we are not thinking of, expansion in capacity on the LPG side at all these days.
Yeah.
So is that the case, or do we see any international demand also?
Yeah. Okay. Yeah.
That's all from my side, sir.
Okay. So I will answer your first question. That we had a capacity available up to the March 2022, 180 number casket, and for which have been expanded to 480 number casket. So we want to understand 480 number casket, what is the maximum revenue can be generated, as I think 325 crores at the 85 to 90% capacity utilization is possible. And this we are targeting and taken under our consideration of the current year. Okay. Now, number two, composite market size you are telling. If you have gone through our presentation where we have mentioned what are the composite product overall market size, yes, there may be the combination of using that composite cylinder, metal cylinders, other cylinder. So market size, looking to the government new policy which has announced in 2022 and the gas station allotted to the various participants, you will find total market size is around for entire type of the cylinder is 22,000 crores business potential is there. But if we have taken the Japanese application for each of the cylinder, maybe the CNG cascade, then compressed biogas, and maybe then automotive sector industry, we can estimate business of around 2,500 crores in the 3 to 4 years time for these composite products out of the total market requirement. Because total market, as I mentioned, for CNG cascade, mobile refilling unit, compressed biogas, gas generator for telecom, CNG for intra-city bus, business size is around 29,000 crores. It is different years for the policy. For example, CNG cascade policy for 8 years, MRE policy for 4 years, all are there. So estimated per annum business is 6,200 crores. Out of that, the composite product, based on the advantage of the composite products which we are manufacturing, this business can be of 2,500 crores in the next 3 to 4 years time. Now you are asking, the third question was regarding to LPG. You are right. LPG, we have a capacity for 1.4 million cylinder when we produce one size, but we manufacture different sizes. So we consider around 1 million cylinder as a utilization capacity. Yes, our utilization is almost around 85 to 90% because ISCL order is there, is one of the gas distribution companies. Other two gas distribution companies are also under pipeline. They have also started using this composite cylinder. And our export is also more than 48 countries it is continue. We have in the last call also we have said very clearly expansion will think next year when the other gas distribution company will also come out. Then we will also have a results from the IOCL which the distribution is ongoing since the last 18 months and further it is going to be continued. So we are not talking LPG expansion as far as this currently is concerned because we are already in our hand for the CNG and hydrogen cylinders expansion work is very, very well it is progressing on. So these are the answer of your all three questions.
Thank you, sir. I will rejoin the queue.
Yeah.
Thank you. We'll take the next question from the line of Jatin Damania from Kotak. Please go ahead.
Good evening and thank you, sir, for the opportunity. So first, on the CNG composite, where we said that we have a current order book of 225 and looking at the government prospect, next 3-4 years looks good. But sir, have we seen any tender getting opened or like what will be our bidding pipeline for next 1 year or 2 years and when the tender is likely to get awarded?
Okay, Jatin, any other question you have?
So second question on the overseas. I mean, definitely, if you look at the overseas business, it's 50 bits less margin as compared to what India is. But since you have already mentioned that you are in the discussion stage with the prospective buyers and shifting the valuation based from financial year 21 to 22 or 23. So, I mean, on broad basis, what is the valuation one should work on when you when you're reading out the asset, broad-based numbers, if you can highlight, and the effect on the overall performance of the business.
Okay. Now, I think question number one, you are asking about the order book. It's a continuous process. Already order, it's a continuous, whoever customers are giving order for the CNG casket, they give us the schedule because they are also ordering parallelly, they need the vehicles to carrying their caskets. So it's a continuous process. But we have mentioned, as far as the order book is concerned, 245 crores is orders in hand already as on date. Further tenders already some submitted, some discussions is on. So time to time, quarter on quarter, we will update about the order in hand, right? And
I must clarify to you as well, the companies are realizing the advantages of the high-pressure cylinders of composites that are being manufactured by a company, Techno Plasts. So the tenders are also getting modified accordingly. I am very pleased to inform you that, being the only manufacturer of such large-size caskets, high-pressure cylinders in India, we almost have a track record of almost about 100% on most of the tenders that are coming through. So I think that should really bode well for the future as well.
So then your question regarding the overseas business, I mentioned to you, yes, the advantage of talking. Valuation part is concerned, yes, our valuer, our advisors are in contact with them. So at present, I can't give you any exact figure or valuation part, but definitely we will update you as and when we will finalize that.
And couple of more questions, if I can squeeze in.
We have mentioned already, that as we objective also we have mentioned very clearly, repayment of the debt, capex for LPG, CNG, and hydrogen, and core businesses in India. Definitely covering up all. And definitely it will cover all of that in this our valuation part.
Yeah. Thank you, sir. A couple of questions from my side, if I can squeeze in.
Yeah.
Yeah. On the, one more question that I would like to understand on the industrial packaging. Now, globally, we are seeing a downturn in terms of the chemicals industry, and definitely export market as far as the industrial packaging concern is looking good. So, have you seen any pressures in terms of the demand in the industrial packaging or in terms of the margin compression on the industrial packaging? And lastly, if you can update on the operation business on the MOX films.
You want to understand about the packaging business overseas?
Yes.
We have seen that except the US part, other two geographies, we have not seen any kind of the pressure. Yes, we have seen the US market is little down by 20%. But you know that our overall geographical distribution of the revenue in US for overseas revenue, out of that entire 100% overseas revenue, out of that 20% we get from USA, 50% from Southeast Asia plus Taiwan, and 30% from Middle East. So US is down because we have seen around 15 to 20%, but that will not affect in overall growth estimation of the companies because we have a good seeing demand of China plus advantage in the other Asian countries, which is Indonesia, Thailand, Malaysia, like that. And Middle East is also doing very well. So overall growth in overseas market, which we are estimating in packaging for about 12% to 13%, that is online. We have not seen any kind of a pressure on the margin of the businesses. Even margins is going to be expanded by 10-20 basis points, is going to improve.
And last one, the MOX film.
Pardon, please?
MOX film.
So MOX film is a very, very small in percentage of the overall revenue, but okay, you want to understand this, the season is ongoing, it's a good business. You know that in MOX film maximum business we can do around 150 to 160 crores, that's our current capacity. We are not expanding in that particular product because we had seen in the COVID period it was affected this business, but yes, it is going to be continued. There is no any much margin pressure also because these are a product based on the quality of the products. So not affecting any much about that. In fact, you take the revenue of 120 or 140 crores revenue out of approximately around 5,000 crore revenue, it's hardly 2.5% of my total listing.
Right, sir. Thank you. That's all from my side.
Yeah.
Thank you. We'll take the next question from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Thank you. Good afternoon. Thank you for the opportunity. Sir, I just wanted to understand our EBITDA margins. Like 2-3 years back, we had highlighted that our value-added products EBITDA margin would be around 20% and 14% for the composite products. So I just wanted to understand this decline in margin. Is it purely from raw material increase, price increases, or is there any different factor behind that? And second thing was, I wanted to understand about the industry, about how much market, like as you want to say, 2,500 crores market in 3 to 4 years time. So how much can we get out of that, and what kind of shift are you seeing from steel to composite material in the CNG and LPG, and how much exponential that can be? Thank you, sir.
Oh, I got, Madhu, your point. Just, I think you want to understand that the EBITDA margin is not affected. You see, except the corona period where the EBITDA margin was in the range of 11 to 13%, that is because of the certain products were not allowed to manufacture during the COVID period. You keep apart the COVID period, then after our always history there, EBITDA margin was in the range of 13 to 15%. And we are in that line afterwards, because after the first COVID full year, last year we achieved EBITDA margin of 14% in all of the year. And further, I have already mentioned in my call also, value-added product EBITDA margin is continuing the range of around 18 to 22%. So average maybe around 20% in the value-added products margins are there. And that is going to be continued. And because whatever we have a 92% business is B2B business, where we pass on our increase or decrease to our customer. So we are not affected by what kind of the volatility prices in the commodity product or polymer products they have. But we have a system of passing to the customer. So we'll definitely, as our value-added product is going to be expanding already, so EBITDA margin 20-30 basis points is going to improve year on year. And you want to understand about the growth plan, definitely company management looking to the product in hand, estimating over 15% growth around the whole of the year across the products.
Thank you, sir. So 20 to 30% EBITDA margin increase for every percent increase in value-added products. Is that correct?
Yeah, of course. As the capacity is increasing, expansion and utilization is increasing, yes, all of the year EBITDA margin will definitely, you will see the improvement, which currently in terms of the percentage, you have seen the EBITDA margin, currently EBITDA margin was in the 13.7%, yes.
Okay.
Even you have seen 13.7% EBITDA margin, as against last year 13.1%, and you have seen whole of the year, FY23 EBITDA margin was 13.5%. So certainly you will see improvement in the margin, maybe 30-50 basis points, as the utilization and quarter the revenue will increase.
Thank you, sir.
Yeah.
Thank you. We'll take the next question from the line of Karan Premchand Gupta from CAVI Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, just wanted to check in again on the sale of the overseas business. Now, in your opening comments, you mentioned that you're in talks for 2 of the 10 geographies.
Yes.
So, is that all that it's limited to, or are we looking to divest all 10 geographies, or if you could just tell us a little bit more about that?
In any fact, I tell you, as 2 geographies are taken in hand, third is also in process, but we'll take after completion of this 2 only. 2 out of 10 geographies. No. I tell you, just I am clarifying you. We have a 10 overseas countries, plant in the 10 overseas countries. Now I mentioned to you 10 countries business in 3 geographies. For example, few geographies we are in discussion.
Okay. No, I mean, you would appreciate that, we've been very patient shareholders.
No, I know very well. And we are also having a patience, and we are also talking since last, I can say, after the result, last 6 months also, we are talking based on 2022 results. So 3 geographies, as I mentioned in you, Middle East is the one part, 4 countries we have a presence, Southeast Asia, 5 countries we have a presence, and USA is the one part. So this we consider the 3 geographies. Out of that, 2 geographies we are talking, And as I mentioned to you in my in the beginning statement, that we are in the advanced stage.
Okay. Fair enough, sir. And sir, on the domestic business, we have a number of plants that are spread throughout the country. Are there any plans for any kind of consolidation, or do you think this is the most efficient structure for our activities currently?
Modi, you are right. Consolidation, you are talking individual, it's a routine process. Always will do based on the logistic advantage. So India, we have a presence in 16 locations. So definitely process is on. And wherever we need minimum size of the business, management has decided to continue that location. If that location is not getting the required revenue, then that will be consolidated to the nearby location. So there is a routine and continuous process.
At the same time, there are new geographies also.
There is the new geographies will be added where the requirement is coming more.
Okay. So what I'm trying to get to is actually, also on our return on capital. So we had some targets that were discussed about a year and a half ago. I just wanted to also understand your trajectory towards achieving those.
You are right, your point of view. I have mentioned in my last call also and many meetings also. We are consolidating not only the overseas business by disinvestment, but yes, in India, product consolidation also we are doing. As I mentioned last time also, certain products which has a revenue of less than 40 crores a year, we have closed down that businesses like molded furniture, we have closed down. The Genex healthcare products, small products were there, we have also closed down. So certainly management has decided now to continue and do the product where the revenue is more. And yes, this process is going to be continued. So yeah, you are right. I mentioned, and you know that target of the ROC, which is currently 13.5% around, is going to be 19% in the next year. That is the target, and we are on that achievement of the target. For that, work is already on, and quarter on quarter, you will see the progress. Because you know that the only repayment of the debt is not the target of the increasing the ROC, but yes, product value addition sale will increase, EBITDA margin will expand, reduction in the working capital also in on radar. So all combination of various factors will enable us to increase the EBITDA, this ROC to 19% in the 3 years' time.
Right, sir. Do you have any shorter-term targets? So instead of, say, 3 years out, maybe by the end of fiscal 24, do you have any shorter-term targets that you're internally working with for returns on capital?
Oh, yes, you can take, as I mentioned to you, currently 13.5%, and I want to achieve 19%. 19 minus 13.5, the difference is 5.25%. Around 1.5 to 1.75% annualized increase, you will be able to see that.
All right. Thank you very much.
Yeah.
Thank you. We'll take the next question from the line of Deepa Agarwal from Niveshai. Please go ahead.
Yeah. So my question is, what is the current capacity utilization of the Dahej plant which is recently commenced?
Pardon, please?
My question is, what is the capacity utilization of the Dahej plant which is recently commenced?
Oh, it's one of my subsidiary company like TTL Plastics, who has just completed greenfield manufacturing fully automatic plant in Dahej for manufacturing the packaged products, and where that is for plastic drums, jerrycans, and for IBC. It's just begin because you know that in the first quarter always, whenever new plants, all vendors need to approvals, supporting, testing, internal standard approvals, that thing required. So already plant has started, but at the end of the year, we are estimating the utilization in the first year itself to reach around 50 to 60% in all of the year.
Okay. My next question is, could you please explain the segment of Eureka tanks, how is it panning up, what are the revenues and what are the subsidies, what are the involved in Eureka tanks?
Pardon, please, you are talking specific one of the products?
Urea tank, sorry.
Okay. My colleague, Mr. Raghupati, will explain this.
On the urea tank, we've already developed 2 models in consultation with the OEM companies, and we have also started the business for urea tanks. It involves very recognized OEMs as well. So these are one of the 2 fast-moving models that are there. There are another 3-4 models which are also there in the pipeline. As we are in a position to see the Euro 6, which is being enforced. The development of these urea tanks have taken, larger momentum. And especially with commercial vehicles, I think we have been more or less, we should be in a position to complete this requirement in the next 1 or 2 years or so.
Any expected revenue guideline from the same segment?
No, madam, in fact, I tell you, it is one of the blow-molded products. Urea tank is developed. It's a product depending on their models also. We don't give any kind of the product-wise revenue specific to Euro. But I can tell you, automotive segment revenue, where we get around 3 to 4% of our total revenue. So that will be where we are also estimating growth of around 10 to 15% in our overall projections.
Okay. My last question is regarding the oxygen cylinder. Are we manufacturing and have some order booking position with respect to oxygen cylinders?
You're talking about the oxygen cylinder, right?
Yes.
So the Pati will answer about it.
We have developed these oxygen cylinders in 2 sizes very specifically to begin with. These are mostly used for, people who are in the higher altitude or diving or even firefighting expenses, etc. Order bookings are already there. Already been booked. The product has been also got the PESO approval. We should be launching this product probably anytime soon. Probably in the next 1 month or so, we should be in a position to launch them.
This is part of the composite products only.
Oh, okay. Can I ask one more question? The last one?
Yeah, you can ask.
I want to know, the CNG cascade, in what vehicles are we currently supplying the CNG cascade? We have huge order book as well, so I would like to have some knowledge of that.
Yeah, as you would appreciate, the CNG cascade is nothing but a bank of cylinders which are, kind of connected together to enable the carrying of the CNG gas from one mother station to the retail outlet. So basically, these are kind of a mobile storage tank which are used by the CGD companies or the gas distribution companies to transport the CNG from their mother station to the distribution. So that's the places where the cascades are used. We have whatever little capacity that we have more or less utilized in for that kind of application. The next set of expansion that we have planned for CNG is also taking into account the cylinder designs and the respective sizes for use in the automotive sector, and that is when you will find these cylinders also being used among the trucks and the passenger vehicles also. So some of those applications with the high pressure lightweight cylinders will come into being as we roll out the expansion project. So right now our cylinder business is focused on CNG cascades where we are fully utilizing the capacity.
Oh, all right. Thank you.
Welcome.
Thank you. We'll take the next question from the line of Dolly Chaudhary from Niveshaay Investment Advisors. Please go ahead.
Hello. Thank you for the opportunity. So I have 2 questions regarding CNG cascade.
Excuse me, ma'am. I'm sorry to interrupt. Ma'am, your audio is too low.
Hello. Am I audible?
Yes, ma'am. Please proceed.
So I have few questions regarding CNG cascade and onboard application. So it has been mentioned in the previous calls that no other players are currently that much into manufacturing of these cylinders, rather they are into assembly of this. So I wanted to know the update on that and what is the price differential between the 2 products.
Could you just repeat the first part of the question?
So it has been mentioned previously that not many players are into the manufacturing of these CNG composite cylinders. They are more into the assembly of them. So I wanted to understand the price differential between the products and what is the competitive scenario right currently.
Yes, admittedly, we continue to be the only manufacturer for the latest technological innovation that is called the Type 4 composite cylinders. There are other players of CNG cylinders in manufacture in India, that is the Type 1 that is made of conventional steel cylinders. So to a very large extent, these Type 4 composite cylinders go in replacement of the steel cylinders, and there the weight reduction is almost to the extent of about 80% or so. Price difference notwithstanding, these advantages of huge weight reduction brings about a lot of convenience to the people who use these cylinders, because they are able to carry more gas and probably drive the vehicle lighter, gives you a better mileage. So these are the reasons as to why these composite cylinders are a runaway success in any geography that they have been put to use. So I'm in a position to really see that also developing in this market as well.
So I was talking about other players in Type 4 cylinder only. Like you previously said that they are more into assembly of these cylinders, not into manufacturing. it has been mentioned previously.
No, madam, just I want to explain you. In fact, I think CNG, we talked about the CNG cylinder. And now the CNG cylinder cascade we talk is a complete system. CNG cascade means it is the one complete system where the cylinder will be mounted and that cascade will loaded on the trucks and that will use as a mother station to the filling station because new gas stations are coming. Now, automotive sector is a different where the automotive OEM manufacturers will buy the cylinder, no need cascade from them. So they will buy the CNG cylinder from us for the different sizes based on their capacity of each of the vehicles. As my partner has mentioned to you, we will see that use of automobile sector next year only when we are ready with our expansion plan. So presently my order book is healthy for the CNG cascade itself. So as an individual cylinder, we are not selling it currently.
Okay, so my other question is regarding Indorus Synergy. So this company is also into the same thing and they are manufacturing some modular mobile filling stations. So I wanted to understand what is that and is company planning to cater into this segment?
No, the mobile stations that you are talking about is the one which is basically used for carrying the CNG gases from one end to the other. Number one application. Number two application is the gases that are being generated out of the CBG stations or the biogas stations that are there. So they also require high pressure storages, etc. So those are the applications there. So wherever you have high pressure requirement for these gases to be stored, these cylinders will go in as a bank to be stored either on a stationary basis or probably on a mobile basis.
Okay, so and the last question is regarding the restructuring. So I wanted to know that if this restructuring that we're planning happens this year soon, so what is the revenue loss from that and at what time the company is planning to recover from the domestic business?
Yeah, I think the good question you asked. Because one thing, as overseas revenue, it is in the range of around 1,400 crores business. And that business we are internally estimating to recap in the next 3 years' time. Or 2 years' time, because considering the growth of, for example, last year we did business of 4,293 crores. If we reduce out of 1,300 crores, the balance is 2,900 crores. So we'll come back to the original level of this turnover, maybe around 4,000 crores or over and above that in the next 2 years' time. But one thing again I mentioned, we are not diluting the 100% equity. We will continue, the minority investment will continue.
Okay, sir. And as you said, one last question. So that company is currently focusing on value-added segments. So I wanted to know the outlook for industrial packaging and what share can we achieve with the current capacity in this year or 2-3 years in industrial packaging?
As I mentioned to you, overall growth estimate we are making over 15%, maybe around 17%. Packaging business we are estimating as the chemical industry is growing, volume growth is there. Looking to the export and China plus advantage, around I can say 12 to 13% growth we are estimating. But certain other products we are estimating growth more. Composite products we are estimating more than 35% growth. In the pipe business we are estimating growth of around 13% because last year business was large in the PE pipe business. So overall more than 17% we are estimating growth. Packaging business is specifically asking, maybe in the range of around 12%.
Okay, sir. Thank you. That will be all.
Yeah.
Thank you. We'll take the next question from the line of Ganesh from GK Advisors. Please go ahead.
Sir, audible?
Yeah, Ganesh.
Yes. Sir, looking at the overseas and our local revenue split, how much of the overseas revenue
sorry to interrupt. Your voice is muffled. We are not understanding what you're speaking actually. Could you please switch to your handset?
Okay. So how much of our composite or value-added revenue is coming from the overseas bucket?
I just clarify you. Overseas location, we manufacture only the packaging product. That is plastic drum, jerrycan, conical pen and IBC. No. We don't have any composite product in overseas.
Got it. So just one clarifying question from my previous set. So we have this specific section of oxygen and breathing air applications for composite cylinders. I'm keen to know what is the revenue potential just for those applications, sir.
I think we've already given you a guidance on the overall composite cylinder business, so it's difficult for us to give you a breakup on each individual type of cylinders. I think overall, my colleague Bharat Vaghera has already given indications also on the projected revenue for the composite cylinders.
It will be overall composite revenue, we are estimating around more than 500 crores this year, as against 350 crores we did last year. LPG and CNG together.
Got it, sir. Thank you. That's all from my side. Thank you.
Thank you.
Thank you. We'll take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead. Mr. Poddar, I have unmuted your line.
Hello.
Kindly proceed. Yes, sir. Please proceed.
Yeah, thank you very much, sir, for the opportunity. So first up, I just wanted to understand more on the opportunity on the hydrogen sector, basically. So what sort of opportunity we are seeing? And I think we were working on developing the hydrogen cylinder technology, right? So where we are in that particular segment?
Well, this is one of the most promising development segments that we are into post the CNG potential that is already getting captured. The development on the hydrogen cylinder has been very, very positive because we've been able to develop very successfully the hydrogen cylinder in-house and meet the test requirements as has been prescribed by the international standards that are there. We will be moving the application to PESO for the approval next year. The development of the hydrogen cylinders has also been encapsulated in our expansion plan. So the new expansion plan, that is a capacity plant that is being set up next year, should also in a position to be able to successfully, commercially exploit the hydrogen cylinder potential to begin with. Some part of the capacity is earmarked for that applications as well. As far as the potential for the hydrogen cylinders are concerned, that it is a huge global opportunity that is really coming up. There is every geography, every country that you hear about, they are looking at hydrogen as an opportunity to decarbonize it. India is also has set very ambitious targets for it. So based upon our successful models on the composite cylinder for LPG, CNG, we are very, very positively poised towards exploiting that potential as well.
Okay. So what I understand is that the development of hydrogen cylinder, it's on the positive side, right? And we will be moving for approval to PESO maybe next year for our product.
That's right.
Next year means 2024, right?
That's right.
Okay.
Deepak, by this time, I think we are already sitting in here. You will heard something about the good development in hydrogen cylinder.
No, come again, sir. I didn't get you.
By this time, as currently we are in the month of August, so next year by this time we will come to know good news about the hydrogen cylinder development.
August 24.
Yes.
Okay, I understood. And what sort of capacity would we would be looking to create in this particular segment, hydrogen cylinder?
I mentioned to you, you will see my last conversation where I mentioned that currently expansion is coming only for the CNG cylinder. Correct. Is the 600 cascade, but we are buying certain equipments so that we can do the seed marketing for hydrogen cylinder, but major capacity expansion we will see in 2025-26 when the hydrogen gas will be made available. So we will keep ourselves ready for do that. And expansion, we know any expansion, first we are already experienced, so we'll take around 6 to 8 months times only.
Correct. So currently we are focusing more on the oxygen cylinders and the CNG cascade cylinders.
CNG, oxygen, and development of hydrogen. That's the thing.
Correct, I understood. And so just I wanted to understand, our capacity utilization is almost, I think, optimum level at 85-90%, right?
Yes.
And we are still talking about maybe 15% growth for this year. So what will drive that growth? Will it be value-added product?
Listen, I am talking across the product, growth is around 15 to 17%, which you will see. I have mentioned in just recently, the one gentleman has asked me the questions. Packaging business, we are estimating growth of 12%, but composite product growth is estimating over 30%, and that will going to be continue because next year the composite product expansion will also be completed. So overall growth we are talking around 15 to 17%. But yes, composite product, which have a valued product, which has a margins are also reasonable and good. So that will continue, and that will give the improvement in the ROC, working with the cycle time, across the benefit we get to reach our target of the ROC.
19% over 3 years, right?
Yes, yes.
And among this growth, our value-added product can grow higher, right? I mean...
of course, no doubt.
Okay, I understood. And my last question is on seasonality. Do we have any kind of seasonality in our business?
I don't think so, except the PE pipe business, which is in the normally 1 or 2 months, but that also now you know that in India, the rainy season is also very different. Now you will find in the current season also in Rajasthan, no rains are there. In south rains are there. In western part rains are there. So I think this is not affected. Finally I can say, most of the products are seasonal. Nothing is seasonal business. Right?
Yes, sir. So the current participant has left the queue. We will move on to the next question, which is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Yes, thank you, sir. Sir, what kind of IRR or ROC do we expect before making any new investments? Because when you say that 19% ROC in the next 3 years, I want to understand what will be our capacity utilization in value-added products and all the new capital that we are doing in value-added hydrogen, oxygen. So what kind of IRR do we expect from this?
I tell you, the IRR, which is 19% projected for next 3 years, is based on the current product which are in hand and considering growth potential which is in the existence and which is visibility is there. We are not considering a hydrogen part in this ROCE, because we have not considered any kind of the fresh investment also from that. In the present 3-year projections, we are considering business will grow over 15%. Further, the capex plan next 3 years also will be around 200 crores, which is inclusive of the maintenance capex, automation, re-engineering, and to maintain the capacity and capture the growth. So that will be adequate for us for next 3 years. I can say the 600 crores capex expansion is adequate to get that growth of over 15% and to achieve the ROC of 19%, because certain ROC improvement will come from the improvement in the working capital cycle time also.
Okay, and sir, what is the capacity utilization in the composite product?
I mentioned, I think, last time also, capacity utilization in the composite product, we have 2, LPG and CNG. If you ask me, almost around 85 to 90%. Therefore, I had mentioned to you, we are not launching our CNG cylinders in the automotive sector currently, because we have a healthy order book for the CNG cascade supplier, CNG cascade application, so we are continuously focusing on that.
And sir, what will be our turnaround time for sales from the time we receive our order book?
Pardon, please?
So how fast can we produce our products from the time we receive orders?
I tell you, in normally big kind of the orders like cascade orders, normally person give us the schedule, they give us the order, they give schedule as per their requirement on month, but we have a quite, I can say, the supplier base has been increased for CNG cascade applications. As we have experienced, this product is just, I can say, 22, 23 and half of the year was there. Almost 2 years back, the CNG cascade has been launched. So users base is increasing, and every users are giving us the time for execution of 6 to 8 months time, and certain spot orders also come that we execute because we have a capacity available, and our other customer accommodate in that rescheduling. So as I mentioned, utilization 85 to 90%. Yes, order execution time, customers always give us some time, because as they give me the orders, parallelly, they give also orders for the new vehicles on which they would like to install their cascade. on the trucks.
Okay. Thank you, sir. And how fast can we ramp up our capacity? So, like you said,
I tell you, as the person has experience, you know very well. Once first time always takes time. Any capacity expansion, certain in whatever is our end, we can do it. But normally it is 6 to 8 months time.
Okay. And sir, just the final question. So what kind of improvement are we going to see on the working capital side that will help us increase our ROC?
I tell you, working capital days, we are expecting to improve around 5 to 7 days on the yearly basis, but it will go in the range of 85 to 90 days. I am keeping myself target for the working capital cycle time, which is currently in the range of around 105 days.
Okay, so
I am keeping the target for improvement by 6 to 7 days on a yearly basis.
Okay, thank you, sir. That was my final question.
Yeah,
Thank you. Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Vikram Suryavanshi for closing comments. Over to you, Mr. Suryavanshi.
We thank the management of Time Techno Plasts Ltd for giving us an opportunity to host the call and taking time out for interaction with the stakeholders. Thank you all for being on the call.
Yeah, thank you very much to all my valued participants to hear patiently. And thank you once again.
Thank you, members of the management. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.